national data in terms of where national as well as state GDP is trending. There's good unemployment data that is included, but ultimately, the numbers are that are most critical are what are the state sales tax and income tax collections performing. For the months of July, August, and September, we have beat, or the state has beat, the revenue projections that OBM set. And it's important to note that those revenue projections were established before the pandemic. So these are pre-pandemic numbers that OBM is comparing performance to. You'll see there that both July and August sales tax and income tax exceeded estimates. The only place where we really saw any sort of significant lag was in the CAT tax, which is the commercial activity tax. The preliminary numbers for September came out yesterday from the budget office, and they saw, as I think that they had predicted, that income and the non-auto sales tax were slightly below what their estimates were. But overall, tax receipts finished slightly above budgeted estimates by about 0.5%. And year to date, we are both tax receipts and then total GRF revenue, which includes some non-tax receipts, federal revenue, which is really driven by Medicaid dollars, are also above estimates. That's pretty significant because as we talk about the OBM projecting a $2.4 billion shortfall, at least in the first quarter of fiscal year 21, those numbers don't seem to be bearing out. And so in my mind, that's some really positive news. So what does that all mean within each of those major categories? For the income tax, OBM is mostly attributing this to a timing issue, that the reason that the income tax is ahead of estimates for the year is that the delay in the April filing deadline to July 15th, is really just a shift in when revenues would have otherwise been collected. However, the silver lining there is that the withholding tax collections have exceeded the estimates, the pre-pandemic estimates, and are on par with prior year collections. So what does that maybe tell us? Well, even though we have close to 9% unemployment, the unemployment is primarily focused in low wage sectors, hospitality, service, retail, and with reforms in the state's income tax over the last several years, those low wage workers don't pay a lot of state income tax already. And so perhaps the income tax, collections are going to be, less impacted by the pandemic than perhaps what OBM was initially projected. The fact that September was just shy of their pre-pandemic estimates is in my mind a good sign. And then the sales tax, OBM has said that the enhanced unemployment compensation, the $600 per week that recently ended, as well as the $1,200 stimulus payments that went out, is really what is driving the sales tax collection numbers up. And that should there, the absence of additional federal relief to families or through unemployment is going to start to drag the sales tax numbers down. That said, September, the numbers were still pretty strong. And OBM has also kind of opined in their analysis that there has been a shift in consumer demand from non-taxable service things to consumable goods. And, as you think about perhaps your own spending habits over the last several months, I know that we took, we didn't really take any vacations this summer. We did buy, some new furniture, and we took some additional trips to Home Depot and Lowe's, and those things are all taxable. And so again, perhaps there's some good news there that the sales tax is not going to suffer as much as perhaps OBM had projected. Really, the only place that there isn't, good news is in the consumer activity tax, which has lagged estimates for the first quarter of of fiscal year 21. That activity, though, is largely reflective of the Q2 activity, so the April, May, June activity that those businesses had. So the OBM also thinks that the CAT tax is probably at its low point in terms of collections for the year. So a lot of unknowns, but generally I find these numbers to be, to give me optimism, and that perhaps things won't be as bad as what OBM was initially projecting. What they have not done is come out with their what is the fund balance table, which is typically the last page of the governor's monthly financial report. Basically says, here's how much of the, because they would need to at that point say, here's how much of the rainy day fund we need to use. Here's what the actual cut is going to be to state expenditures in fiscal year 21. And, admittedly, they don't want to be wrong. And so I think that they are buying themselves a little more time to make those final decisions. But from my perspective, it is generally good news that we are seeing in the governor's monthly financial reports. And so that, carries into then a discussion of what does school funding look like? The amounts that you are seeing on your payment reports are reflective of the FY20 post budget cut amounts. And we expect that those are going to carry through fiscal year 21, but we don't anticipate, at least at this point, any additional reductions. I know that there was a big concern a few months ago that there would be supplemental reductions on top of what you already experienced in fiscal year 20. At this point, we think that that number is going to hold. We also think that the increases in the Student Wellness and Success Fund payments, as well as the Enrollment Growth Supplement funding, are also going to hold. That if you're seeing increases on your payment reports right now, that those will continue to pay out at their higher amounts. The things that you will want to, and Chris will talk more about this, that you'll want to be most tuned in on are your transfers and adjustments, which are still based on current year data. You will see in your October number 2 payment, the increase in your community school transfers. We saw for the first time in many years an increase in the number of students that were enrolled in community schools, primarily online schools. And this maybe shouldn't be surprising to us, that while most of you are offering a virtual option for students that want to do remote learning, we seemingly have seen a shift in and an increase in the number of students that are choosing online community schools, at least to start the year out. So you'll want to make sure that you pay particularly close attention to all of those transfers and adjustments. And then at the very end of fiscal year 20, there was some supplemental funding that was provided to generally higher wealth school districts through House Bill 164. That was paid outside of the payments, our foundation payment system at the end of FY20, because we had already processed all of your state foundation payments, and it is showing up as a JV adjustment on the statement of settlement this year. We also expect that supplemental offset funding is going to continue in FY21 at the rate that it was paid out in FY20. And so I kind of mentioned this, here are the elements where your FY21 data matters. And I won't read through it, but just for you to see that while FY21 data largely is a non-factor in the calculation of your payments, it's still important to work closely with your EMIS coordinators, make sure that you're paying close attention to your FY21 data, because it does impact, primarily the transfers and adjustments section. So I mentioned this, we expect that the FY21 Student Wellness and Success payments are going to pay out at their higher calculated amounts. For a handful of districts, you likely saw, and those paid out last Friday, the first half in your October number 1 payments. You may, have seen a variance between what you were projecting and what the LSC simulation showed during the budget process, year and a half ago, and what you are now seeing on your payment reports. State law requires us to update both your enrollment and your census poverty data. And if in a few situations, we saw pretty significant swings in the census poverty data. I have mentioned this a few times before, but OBM, or we have alerted OBM and the governor's office to some of those swings, and we are in the middle of an analysis ourselves to identify, does it make more sense to use your economically disadvantaged data? It certainly is a data set that you are more familiar with, that is a more stable data set. Our understanding is that the governor's office wanted to kind of mitigate the impacts of the CEP program that allows you to report all of your students as economically disadvantaged, and thought the census data would be perhaps a little more precise at measuring the true disadvantagement of certain communities. But I also don't think that they really anticipated the swings that some of you have experienced. So if you're seeing your payment amounts different, I would encourage you to look at the census poverty data amount in your FY21 payments and look at that compared to FY20. That is likely what is causing that change. The other thing that I will note, since I know that there are a few JVSDs on the call, that we identified over the summer that we were not including all of your open enrollment students, and the law really wasn't explicit in directing the department to add those in. But in our review of the language and really the interplay between traditional districts and JVSDs, made the determination that we needed to update that. So the payment that you will receive next week, your October payment, the Student Wellness and Success payment will include all of your open enrollment students. It previously did not. Unfortunately, state law also says that once we make your student wellness payment, we are not to make any sort of adjustments or updates. So it would take an act of the legislature to modify your payment for FY20 student wellness and success payments for the JVSDs. That said, I think that for most JVSDs, the number is a pretty small amount, but the department, at least unless directed by the legislature, won't update your FY20 payments for JVSDs. So my sense then is that the governor has made several references to student wellness and success during the course of the pandemic, and generally when he is asked about state funding, for schools, he reaffirms his commitment. So my sense is that and all indications is that the executive budget that the governor introduces by next February will include student wellness and success funding moving forward. I think at this point, all of you have heard me speak ad nauseum about the CARES Act, and I've spoken more about federal funding over the last few months than what I typically do, or perhaps care to do. So I have tried to bullet this out, and I actually will not read through all of this, but kind of jump to my advice, which is the first pot of money you received in late May was the ESSER funds. These are the Title I based funds that have the broadest allowable uses attached to them, including the 12th allowable use basically says any other expense necessary to maintain continuity of operations. So you really can use your ESSER funds for anything. They also have the longest period of availability. You have them through September of 2022. So my recommendation to you is use those funds last. Prioritize these other funds that I'm going to speak to first, and use these last. And I would even say, in some situations, if you are struggling to determine how to use these other federal funds, you can actually, make some adjustments and move some of these, allowable expenses over to your CRF or Broadband Ohio Connectivity Grant, should that situation be necessary for you. My next piece of advice related to the coronavirus relief funds that you were awarded in early August is to use these funds second, to prioritize these funds second. And also, and that is because they have a really short period of availability. Although, they're still pretty broad in use. You really just have to meet a 3-pronged test for the CRF funds, which is the expense has to be pandemic related. It needs to be something that you had not previously budgeted for, and it needs to be an expense that you incur between March 1st and December 30th. That December 30th date could get extended, but the department and the state do not have the authority to do that. It would take an act of Congress to extend that December 30th date. And, as you maybe saw on Twitter, looks like things are not moving ahead very quickly on any sort of additional, federal relief, which would either be the HEROES Act or the HELP Act in the House or the Senate. So while both of those, bills have extensions to the CRF past December 30th, it is a wait and see, and and we will have to. You should make plans to get that money spent by December 30th and not count on Congress to act at least before the election on those funds. The other thing that I will say about the CRF funds, local governments have received a significant amount of funding. And just last week, the governor signed a bill from the General Assembly that gives them another $650 million. So if you are in a position where you're trying to identify, I have additional expenses, and the funds that I've received through ODE are just not sufficient, I would encourage you to reach out to your local township, your local county government, and give them a proposal. I know that a handful of other schools and counties have already done that, but I don't think that there's any shame in you going to them with specific proposals about expenses that you are incurring that you can't cover with the allocations that the department has provided you, because we've heard anecdotally that some of these smaller townships just don't have projects or expenses to spend all of these funds before December. And I would also say, the legislature, and I think to some extent the federal government, is looking at how quickly these funds are getting spent. And so where large balances exist from schools and districts, that is in some ways an indicator to the legislature that schools don't need additional funds, which we're certainly communicating that you all are getting these dollars on a reimbursement basis. But as those funds continue to sit with us here at the state, there's kind of a perception that maybe those funds aren't needed. So we're doing our best to communicate the continued need, but I would encourage you to do the same. The Broadband Ohio grant. So use these funds first. They're the most restrictive federal funds that we've handed out because they have to be tied to connectivity. And again, they are, they are part of the larger CRF, so they're only good through December 30th. As an advice here, you can't prepay for services. If you buy capital equipment, any sort of goods, you can pay for those in full, before December 30th. But if you are trying to purchase internet services and are required to do that for a year, unfortunately, without an extension, the CRF funds, are only good for, a monthly maintenance or a monthly service charge through December 30th. And then the last thing, or the last pot of funding, is the governor's emergency education relief fund. My advice right now is that you shouldn't plan for these funds. The governor's focus has been providing funding to educational entities that previously did not receive any sort of the federal relief funds. The funds have been awarded to the entities that I've listed there so far. And the governor has awarded about 43 of his $105 million in total. But the funds are supposed to be split between K-12, higher ed, and other education entities. So it's possible that schools may receive some of these funds, but my advice is to focus on the CRF dollars and and perhaps reach out to some of your local government partners. So then I will finish by looking ahead to the 22-23 budget. We as state agencies have to submit agency budget requests to the state budget office and the governor's office. Those are due a week from today. Agencies are required to submit 2 scenarios. This is pretty common and has been the case since I have been in this arena of state government. Which is a 90% or a reduced scenario, as well as a continuing scenario. I don't want you to be nervous or concerned because even when the economy was booming, and there was a lot of additional revenue that was being, pushed out to schools and districts back in, 14, 15, 16, 17. We were still submitting 90% scenarios. So don't look at this as we're going to have to, we are going to have to prepare ourselves for 10% reductions in our state foundation funding. In fact, OBM takes all of the foundation lines off the table. So this is really an exercise in the Department of Education's operating expenditures. And again, it really is an exercise in preparing the scenario, not really a reality that we are looking to actually have to operate with. It is, it's really more, just helpful for analysis. So because the governor is not, will not be new and there won't be a change in administrations January 1st, his budget is due to the legislature by February 1st. So it's a little earlier this year than what it was 2 years ago. I included these maps, which show changes in property values, also the impact of public utility, and then I also have a couple maps that show the changes in enrollment. If you have seen a presentation from me over the last 4 years, you've probably seen these maps, and I think that it will. This will be important to understand and keep track of in the context of, does House Bill 305 gain traction? Is there, a move back to an actual calculated funding formula in the next biennium? If there is, the changes again in property values are going to impact how much funding schools get. So this was the map that shows the change in property values from tax year 11 to 16. This is what the map looks, and I apologize, the colors are slightly different. They are a little less severe, but this is the change from tax year 15 to tax year 19. If we moved back to a formula with a 3-year average, we would presumably be looking at using tax years 18, 19, and 20 in the calculation of your state aid. Right now, while your funding is fixed, it is generally tied to tax years 14, 15, and 16. So we would be using a whole separate set of property values. And you can see in the upper part of the state, the impact that the Nexus and the Rover pipelines are having. You can also see, which I know Chris will talk about, the impact that CAUV is having on districts with a lot of agricultural value. We've actually seen, property value decline in more rural districts, which compared to, the snapshot previously is almost, a complete 180 in terms of where we are seeing growth and change. This map then looks at just the 1-year change in public utility values. It captures from tax year 18 to tax year 19, again, the impact of the Rover and the Nexus pipelines in, that are a component of your overall total property values. An important thing to note here, because I think Chris might touch on the appeal that is currently in process. It would take an act of the legislature to require the Department of Taxation to recertify any of this tax data over to us at the department. So even though a lot of this value is on appeal and is may be lowered in the future, your tax values that get certified to us are fixed and will not change, even if eventually there's an appeal that is granted and some of these values are lowered. And then this map, was the ADM map, which was really an opposite, of what we saw previously, which was valuation. Generally we saw over the last few bienniums that the places that were seeing the greatest valuation increases were also seeing the greatest losses in student counts. The again, slightly different color tones. But generally, there are still declines in most school districts across the state, although the enrollment losses have stabilized somewhat. And then we are still seeing, growth in pockets, primarily Central Ohio, but also pockets in Southwest and Northwest Ohio. But the northeast part of the state in Trumbull, Mahoning County continue to see double-digit percentage losses, and that is that becomes hard to overcome when you are looking at the prospect of additional state aid over the next 2 years. Those numbers do not work in your favor. So I include this not to say here's what is going to happen with state funding in 22 and 23. But if we move back to a formula, here's the impact of what changes in your property values and changes in your, enrollment numbers are going to have. And the longer that we go without a formula, the more disruptive all of this becomes, which we certainly have and will continue to communicate to the governor's office. So that is all I have, and I will turn it back over to Chris. But I'll hang around as well for questions at the end.
Great. Thank you, Aaron. Okay, couple of things. We're switching over to the forecast now. Want to make sure that we know, your forecaster knows what your board meeting date for approval will be. We don't want to have folks that doesn't have their forecast a couple weeks in advance, or at least a week in advance. And when I say that, your forecast is just one piece. We also need to put together notes and a PowerPoint for you so that you're ready to go for your board. And that obviously will need your review and tweaking. So make sure that your forecaster knows what your board meeting date is that you're going to be looking for approval. And in some cases, if you need that a week or two in advance for a finance committee, usually just the forecast handles that, but make sure they know the important timeline for you. Most folks should be wrapping up the actual forecast. In other words, the sheet, the numbers, as we're working on notes, unless you have a levy or school district income tax. Obviously, if you have a levy on the ballot, whether new or renewal, you ought to wait until November 4th to work on that, to see how things went on November 3rd. I think we will be able to have levy results by the 4th, maybe not presidential results, but certainly levy results. And then if you have a school district income tax, as I will mention a little bit later, you want to wait until the October settlement comes out for that. And that will probably be out about the 28th of October. It usually comes out a couple of days before the end of the month. The reason for that is your October is going to be different than it ever has been in the past. And that's because the April 15th filing deadline moved to July 15th. That means that your payment in October is going to be whatever the SD 100 filings were at that time. And I'll tell you what we're doing about that for our school district income tax clients here when we get to that section. Okay. Right now, most of your forecasters are working on draft notes while you're working on your forecast, looking at that in a PowerPoint. So obviously, there'll be a pretty big rush in the last couple of months, a couple of weeks here to get those things all done and ready to go. So also, as you take a look at your 5-year forecast and your expenditures for fiscal year 21, all of you hopefully have your permanent appropriations in place, since that's required by law by September 30th every year. You might want to send your forecaster your FY21 BUD sum or other report where we can actually see what you have budgeted for fiscal year 21. In our mind, and what we usually tell our clients is, you should have your appropriations for 21 lining up with what your 21 expenditures are in your 5-year forecast, if not exactly agreeing, frankly. So if you don't know what FY21 is going to be yet, chances are you've already done your permanent appropriations. That would probably be pretty handy for us to know that. Moving over on to property taxes. All right, first off, we're not seeing skyrocketing delinquent taxes on class 1 or 2 in the second half of 2019 settlements. I think statewide county auditors were telling people, as a general rule, 5% for class 1 and 2 is what we think will happen. It happened too frequently around the state because we're hearing from people all over the state. So the Auditors Association must have just kind of had an agreement. Let's tell people 5%. The truth of the matter is, we have not seen that. We're typically seeing somewhere around 2%, if that is the case. The largest that we've seen for class 1 delinquencies was 4.17%, and the largest that we've seen for class 2 is 4.5%. And that's over a large enough group of folks that it is statistically significant. So you're not likely going to see this gigantic lump in delinquent tax, where your tax is falling because of that. The other thing I want you to know, we calculate taxes based on what the actual gross amount is. In other words, rates times values. Many county auditors send you a settlement charge sheet, what they call, that'll show what that is. Our formulas in our tax tab are just about precise to what they would calculate on your annual taxes. And then we take your February and August, or your first and second half, since those dates are changing anymore, your first and second half settlement, and take a look at what your current class 1 and 2 and PUP collections are. So we determine your delinquency based off current information. We don't add delinquent taxes that you collected in February or August. We always compute that separately. And the reason we do that is because we want to know what's happened currently. So I can tell you with certainty that delinquent taxes is not going through the roof like folks had thought they were. Typically, we don't see any more than about 2.5%. Taxes in the second half of 2019, frankly, would have shown large delinquents if they were going to happen, which does mean that in tax year 20 to collect in 21. I know some folks are still, putting in a hedge factor there, but I certainly wouldn't put a decrease of 5% in your taxes in the first half of 21. And then again, obviously the second half, which you collect in August of 21, I think that's going to be a little too severe. In fact, I will just say this, that in some cases, we've seen increases in taxes. Now, obviously that's not the norm, but we have seen increases, and more often than not, almost just static from what we had projected. So anyway, I just want to point out that this is not like the 2009-11 period, which was caused by the housing crisis. And that was a slow rolling increase in unemployment as, all construction, homes, businesses slowed down, unemployment went up. It was much slower. It expanded over a little longer period of time. We saw that in statewide reappraisal and update values, and delinquencies did climb there. But this is not the case. I'll show you a graph a little bit later that points out that this was more of a spike, and then we fell right back down for employment. A couple of folks in here, as Aaron pointed out with the maps, obviously any place with large increases in property value per pupil, typically swinging from the east part of the state all the way up to the northwest part, is caused by pipelines. So Nexus Pipeline, Nexus and Rover are a couple of large PUP filers. Nexus has filed 2 appeals on 2019 AV, all right, and Rover has filed 1. Nexus, I believe their first appeal was denied. They filed a second, which is even more egregious. And that, I think, is supposed to, well, at least they've got a tentative date of maybe May of 21 when that will be decided. Rover, in their case, they also have an appeal that is filed, but Rover paid their first half taxes at the regular values and then did what is called a tender pay on the second half for the August, September period based on a much lower amount. Okay. So the question then comes up is, will there be a refund based on whatever happens at the Board of Tax Appeals in 2021? That's really going to be impossible to determine. Frankly, we can come up with some estimates and things like that if you have the data that we ask you to give us, but who knows what the BTA is going to do. We don't, they don't. So with that in mind, there's no way you can possibly know what the outcome of that's going to be. We can just simply make our best guess. Obviously, when we have a situation where a value has been appealed, what we typically will do in our tax tab, I think some of you probably know that, I've talked to some of you that are my clients, we will reduce that value down to the worst case scenario, because that is the safest, most conservative thing for you. Then the question is in the case of like Rover, they paid the first half at the regular values, the second half at a smaller amount. Will there still be a refund due in 21 when you get your settlements there? We don't know that. We can possibly calculate it if we have the data to do that. So you can at least mention that in your notes, and we would in that case, and your board. All right, Nexus, as I said, they paid at the initial appealed lower value that was denied, and now they filed a second appeal for even a lower value. In this case, chances are, if the Department of, if the Board of Tax Appeals rules on this, or some partial, let's split the baby type of thing, you would probably have refunds coming, since they paid on the appealed value versus Rover that paid on the regular higher value. I think Rover was taking a conservative approach on their point of view. CAUV, House Bill 49, obviously back in 17, they increased the capitalization rate. That was the change that House Bill 49 made. And there are 4 factors that goes into CAUV value. Yield, crop patterns, crop prices, non-land production cost, and capitalization rate. Of the 5 things, the capitalization rate is the thing that can basically swing CAU values potentially the most. So that was why they worked on that back in 17 to give relief to farmers. And then they called out that might be an adjustment statewide on average of 30%. The reason they said that is because if you go from a 6.3% capitalization rate to a 7.9, that's about a 27% increase in cost. In other words, when costs go up to the farmers, land values go down. And that's how the CAUV formulas work, okay? If prices go up and everything else stays the same, that's averaged over a 7-year period. And then they drop the high and the low, so it ends up being 5 years of average. And right now, crop prices that are coming on to replace those that are dropping off are below those dropping off. What that typically means is that you will probably see some increases in or decreases in CAUV value in the 2020 tax year that's coming up for collection in 2021 calendar year. How big will those be? Well, again, it's kind of impossible to know. I don't personally think it's going to be near the magnitude that we saw when House Bill 49 changed the capitalization rate. And by the way, those changes should have already washed through tax year 17, 18, and 19 reappraisals. So the last effect of that would have been for tax year 19 collected this year. And in some highly agricultural, bigger percentage of ag value in class 1 than residential, we did see some reductions in values. But those changes should be washed through. The next thing you're going to see is the crop, the underlying crop price averaging that's going to happen, that's actually going on now. Both corn, bean prices are lower, quite a bit, well, not quite a bit lower, but they are lower, but that's going to feed into the formula. So again, unless your district has about 30 or 40% of class 1 in agricultural, we would typically look at that. We're taking a look at Zillow. They have a nice graph out there that talks about sales in most of the areas around the state. So we can kind of see, what was it in 17 up through now if we're looking at the 2020 tax year, collecting 21, and we come up with a weighted average, if you will, because we can kind of identify in our databases the amount of agricultural value you have embedded in the class 1 values. So that's property taxes, a little bit about that. Okay, state aid. We are projecting that state aid will come back to fiscal year 19 levels in fiscal year 22-23. Aaron, don't cringe. But when we take a look at the numbers, we think the state of Ohio is also coming back fairly strongly. And what we're hearing is that we'll hit a point where we come back up to a new base, maybe much quicker than we did after the 2008 Great Recession. In other words, economic viability will increase up to a point where it will hit a new base, and it'll be kind of a sticky point because hospitality, several other industries have not made a comeback and may not make a comeback. So they're the folks that I listen to on a daily basis on Bloomberg right behind me, some of the world's leading economists are saying that it'll be about 2 to 2.5 years for the economy to fully recover. And it'll be those lagging industries, how much travel, airlines are laying off thousands of people, hotels, things like that, cruise ship lines. But so you can disagree that the state economy is coming back, but it will cost $300.5 million basically to restore funding to public schools, at least back to the 19 level. Recalling that the career centers were not cut. And I would say that as a regular city school treasurer, how fair is that to me? But I get it. State tax revenue was down 1.1 billion, 4.6% in FY20 from estimates. But had they collected their estimated 550 million in income taxes with the April 15th, 2020 filing, it would have been down roughly about 2.3%. So we all do budgets and forecasting. That's not that bad in terms of percentage. Obviously, the state level, much bigger in terms of what 2.3% of what is, and that's billions. But so this is our unemployment. You can see we were doing pretty well here. Red line's United States. The blue line is Ohio. Like I said, the 2008 through 11 recession, unemployment kind of creeped up at somewhat of an angle like this. This didn't happen that way. It went up and it's come right back down again. Okay. Now, where it will find a sticky spot is probably somewhere in here until we figure out whether we can go to movies again, restaurants again, do all kinds of other things again. So, but still, it's come back under 8.8% now. State revenue, this is a stack bar chart, not of transfers and other things that they get from the federal government, but this is just pure state tax revenue. This is sales and use tax in blue. This is personal income tax in red. This is a CAT tax, commercial activity, and franchise tax right here in yellow. And then purple is all other taxes. You can see that had the state collected their personal income tax in here, this line would have been up about here. This line would have been up about here. And you would have seen that we collected more money in 20 than they did in 18. In fact, we still collected more money in 20, as bad as it was, than we did in 18. Our rationale is we think it's pretty likely that the state revenue will be about the same or more than fiscal year 19 in fiscal year 21, and logically should be able to fund schools at the fiscal year 19 level if there's the will to do that. I know we all heard great, and again, nobody knows. Lieutenant Governor Husted back in April was talking about a deficit in 21 twice the size of the rainy day fund, which would have been $5.4 billion. That's obviously not going to happen. So what will the magic number be? I don't know that they won't end up in a pretty good position come the end of 21. Maybe not where they projected to be back when they passed the biennium budget, but probably not anywhere near what they thought it could have been if things really turned out to be, a massive pandemic that is killing millions, not hundreds of thousands. Okay, so that's what we're estimating, and that's why. We also think it's conservative when you think about it, because when we took revenue back up to 19 levels for 22, 23, we left it that way for 24, 25. That's also what we're projecting. So if you take the entire span of the 5 years, we think that that's probably pretty conservative, frankly, when you take a look at all of the years. I doubt that there will be no increase in state aid come 24, 25 for most districts. Casino revenue, we estimated that that was going to be off 40% for fiscal year 21. And I think based on the August 31st payment, I think we're going to be right in that ballpark. We're looking at around $32 and a few odd cents per pupil. I think it's going to be around $34. So probably be a little bit more than that. I always think that's kind of funny. We may be in a terrible situation, but people always have money to gamble. Again, if you have a school district income tax, we don't suggest that you do your forecast until after you see what the October quarterly settlement is. So you get at least an idea, because it's going to be different. It will not look like the one you got last year or any of the years prior to this. It's going to be much larger. So what we're doing is we're taking a look at what your July 2018, 19, and 20 SDIT settlements were. And what we're seeing is the July 20, because you didn't get a settlement, they didn't do the April 15th filing, is substantially lower than it has been in 18 or 19. And we're calculating what that amount, how much lower it is. And in many cases, what we're doing is we're taking that amount and we are adding it to your October of 19 settlement from last year, because this is when you're going to get your April 15th payment that would normally come in July. Well, it was July 15th, and now that payment's going to come to you in October. It probably will be more than 50% of what it's down from previous Julys, but we again feel that that's a fairly safe number to use. We think that, and again, I went back and looked at the OBM reports, and it looks like the state revenue surged about $550 million in July. So because that's when they got there. They don't wait quarterly to get their state income tax fund. When you file your return, you have to make the payment with it. So their revenue in July was up pretty sharply. That's why I also feel your October is also going to be up as well. Then for your cuts, because we ultimately, in almost every case, do have reductions in your fiscal year 21 school district income tax over 20. We took a look at your school district withholding information. In other words, and we looked at fiscal year 18, 19, and 20 and saw how much was coming to you on a quarterly basis from employers who are withholding wages or withholding taxes from people's wages. If those look like they were down, and again, I think the worst I've seen this year was minus 14%, then we are probably somewhere between in the 5 to 10% range for fiscal year 21, even with the adjustment in October that I just mentioned. And then we're just going to have to wait and see how things happen in January and your April. The state of Ohio is going to get 2 bumps from from income tax. They got the July payment because the filing deadline was moved to July 15th, but they're also going to get the April 15th payment in 21 because they're not likely going to move that date again. So they'll get 2 bumps. School districts will not, because the April 15th SD 100 filings will be paid to you in July of 21. So we still think the year will run negative compared to 20. Then what we're estimating is a 0% growth. So it kind of stays at that lower level. And then we begin to let up off of that and show 1 to 3% growth. When you look at all the numbers we're looking at, provided that we're right about the 5 to 10%, 0 growth in fiscal year 22 is pretty conservative, because that portrays if you got a 10% cut in 21, you'd still have 10% cut in 22. Again, we're just trying to be conservative with you. We're not trying to overestimate things for you. That's one of the things that we're trying to do, but trying to still be reasonable and have reasons in how we think about things and the data that we've used to come up with these things. So again, jobs are going to get, we're going to probably decrease. Our unemployment will come down, but it'll probably hit a new sticking spot. It will not go all the way back to 4.7% unemployment where it was back in February before all this terrible stuff happened. While this recession is not exactly like 2008, the employment gains will be a predictor of the recovery like it was in 2008. Other income and expenses, just be aware that fiscal year 19 may be a better baseline for trend adjustment for 21 than FY20 will be. There were several areas of 20 that we saw that were affected by the shutdown that you wouldn't want to base your projections on going forward, or you may want to base them on that, particularly for like utilities, but that's not going to happen most cases if school is open as normal. Interest income, in most situations, we have cut interest income 50% from fiscal year 20 for FY21. Some of you may have some older investments that are going to mature in fiscal year 21, but your reinvestment rates are going to be shocking compared to what they may have been when from what you had renewing or coming due. Star Ohio is paying a whopping 0.8% right now, and I know a lot of you have money in that, which is a point in case. So it may be less than 50% also if you have a declining cash balance, but right now we're taking a look at a 50%. Pay to participate student fees and rentals, and likely won't be normal until fiscal year 22, if then. And some districts just cut student fees altogether. Pay to participate, if you're not going to have sports, it's going to be difficult to collect those fees, obviously. And again, I think as Aaron pointed out, watch for Fund 507, 510 impact on your expenses. When they end and that money needs to come back to the general fund, we need to make sure that if you had expenses that you moved over to there and they come back, we need to know what those are so that we project that information accurately. Subs and supplementals were likely artificially low in fiscal year 20 than what they should have been. Some districts paid supplementals for spring sports, some did not. We noticed that if you looked at the note calc tab we have, the reason we pull these two things out is because they typically cause variation. But in particular, we could tell whether you paid your spring supplementals or you didn't. We're assuming that if school goes back to normal, you will be paying your supplementals, because I doubt that many of your unions will probably say, hey, that's okay, just don't pay our spring sports folks. Subs, in many cases, in fact, almost every case, subs were down because you were closed the last 3 months of school. And that either affected your wages here or it would have affected your purchase services if you buy subs through the ESC or other provider. Fringes, just another thing that we want to always mention, make sure we know about your premium holidays and amounts. Most districts will have a premium holiday periodically. If you do take a premium holiday, let's say $500,000 in fiscal year 21, we need to add that back to fiscal year 22, or your trend for insurance is going to be $500,000 lower times 4 years. That's a $2 million mistake. So premium holidays are tricky. We want to make sure we have them right. I know there's several consortiums around that give 2 or 3 premium holidays every year. Some of you, if you want to provide some leadership, might want to ask that consortium, when are you thinking about lower our funding factors? Because all you're doing is just sending money back to us that we're paying you. But that's another matter. I could spend half a day talking about that. Purchase services, utilities were artificially low, as I already pointed out, in many cases, especially if you have air-conditioned buildings. Subs have contracted out, as already mentioned. Supplies and equipment. Many districts slammed on the brakes in fiscal year 20. We saw that, especially in supplies and equipment. You may need to reset these items based on a zero-based budgeting approach. You may have read the last quarterly update from the OASBO journal, where we had an article written by Michelle Maher and Dan Wilson in there. This is one of the reasons why. You might have to reset what are your plans for this, because again, 20 may have been a really bad year to project going forward on what those costs are as a baseline. And again, CARES Act and the 510 CRE can be effective in these supplies and equipments, lowering those amounts. So you might want to make sure that, as you go forward, that those are set in place. Posting and other fund variables. What's my time? Well, I'm already out of time. I'll try to wrap this up in 5 minutes. Since Aaron, you were right on the mark. I know a lot of new treasurers may not know anything about this. That's why I'm going to mention it. On your number 2 June payment every year from the state, you may, in some districts do, some districts don't. If your average per pupil property value is below the average in the state, and you are in a Ohio School Facility Commission project, the state of Ohio will increase the amount that you raise off of your half mil to be what the average property value per pupil would be in the state of Ohio. That's called a JV 20, and it'll show up as a half mil equalization payment, and it will have a 3219 right beside it on the code on the foundation settlement. I want to make sure that you understand that money belongs in your 034 building maintenance fund. Okay. I've seen several school districts post that as an 001 general fund. If you have a knowledgeable state auditor, many of those probably don't know much about this either, but if they do, you will have to they'll make a finding for an adjustment on you, and you'll have to move that money out of the general fund and post it in your 034 fund. That's always the June number 2 payment. If you get it, you can look back and see. If you got it and you posted it wrong, you've probably already heard from me or one of the forecasters. That's just what the law is, and that's what it is, because this happened a long time ago, the law on the Facility Construction Commission, so you might not know about that. I think, Aaron, you've already talked about that the open enrollment for JVSs on student wellness and success won't be paid on 20, but it will be paid on 21. Good. JV 18, House Bill 164 adjustment, and then a JV 86 insufficient fund reduction. What are these? Okay, so in fiscal year 21, if you were cut, okay, so even if you were a district that got some money added back so that your cut wasn't greater than 6%, you're still going to see the amount that was initially cut for 21. What you're doing is you're getting a supplemental payment for you down here, and that should go in 3110, your foundation. Likewise, if you are getting JV 86, so most districts or many paid back what they owed the state if they didn't have enough money from May through June to pay the state back for what they've already got to match their cut. Some districts wrote a check. If you didn't do all of that, then the state is deducting some money from your foundation settlement this year. And you can have both of these things going on the same settlement, where you're getting some add back and you're getting a reduction here. But I would also do a reduction to your 3110 for the amount that shows up as a JV 86. BWC rebates, there will be another rebate coming out near the end of October. Adams Inc. is working with the BWC to get that sheet. Once we have it, we will make sure that we know what all of our clients' reductions are. We will typically put that in as a reduction of a prior year expenditure at the amount noted on the BWC refund rebate. So I know that different people do different things with that, but if this is a very classic refund of a prior year expenditure, because last year's BWC is what this is. So that's typically where we'll put it. If we can get that information here in the next week or two, we'll probably make sure everybody knows what it is. SF6, June number 2, the ODE made a double payment / deduction on your SF6. That was corrected on the July number 1. It's called a JV 89 post to reduce your receipts, and a JV 90 reduction of expenses. So what that is they're either giving you back money that you were deducted twice for an SF6. In that case, they're going to pay you the whole amount in July. But if they have to take some money back from you, if you got too much money, in other words, you got a double payment of SF6, they will take it back gradually. They won't, depending on the size of it, they won't yank the rug right out from underneath you. Some of the worst case scenarios I've seen that they'll take it back on the July 1-2 and August 1-2, and it's usually back by then to the state, because that's money that they ended up having to pay to districts that were double deducted. Okay. So that's what that is. If you see any of those, not many districts had this. And if they did, it was not material typically. Don't forget that economically disadvantaged and CTEC are part of Line A foundation formula. And those do need to be posted in 001, 3211 and 3219. I saw last year, a lot of school districts, not a lot, but several, just stop posting money in 3211 and 3219 because it was included in 3110, your basic foundation. Nope, you're still having to put that in restricted categories. I saw some posts on OASBO this year about folks saying, how do you post this stuff, the rounding numbers? One of the ways you could do this is post all of your revenue in line A on foundation in 3110, and then the June number 2 payment, you can make an adjustment to take the exact dollar amount of your career tech and your economically disadvantaged out of 3210 and post it to 3211, 3219. Then you don't have to worry about the rounding posting each month, things like that. I know that was one of the questions I saw. TPP fixed sum, we see this happen quite a bit too. Fixed sum levy is an emergency levy and a bond issue. If you had a qualifying fixed sum levy when we phased out tangible personal property, you're still getting that on the emergency levy through fiscal year 21. Then that will end. All right. But you will continue to get money for a bond issue that would have been in place when House Bill 66 was passed to do away with tangible personal property. That will last as long as the bond issue is. But that money, it should be posted to a 3135. The part that belongs to the bond issue should be posted in the 002. It's a bond issue money that you're being reimbursed for. A lot of districts are posting that in the general fund because there's not enough detail that comes along with that payment so that you can see how much belongs to an emergency levy and how much belongs to a bond issue. But after fiscal year 21, whatever you're getting should basically belong to the bond issue. So just FYI on that. Manufactured home tax revenue, it's typically posted to 001-1110. The reason for that is that any trailers put on site, or they call situs, after January 1, 2020, must be taxed as real property. But just know that that value is not on your tax abstract for class 1. So we typically suggest that that's where it goes. Primary indicator of that is you get rollback and homestead on this money. So that's why we say we should post it here and add it here. We see it posted in 1890, 1190, other income. And we try to follow along where you've been posting things because consistent posting is very important. But typically we suggest that be a property tax because that's really any new trailers put in place are going to be treated that way. It's not necessarily what I consider other income. If you have a significant amount of trailer tax, and I've only got a couple clients that do, and I'm talking $200,000 or $300,000 worth of that, then you might want to keep it in 1890, 1190, because that's enough to blow your taxes off course a little bit. So it'd be maybe better to track that up in another area, especially since that value is not part of your abstract. TIF revenue, this is posted in various places. We've seen it posted, and we typically suggest we post it in 1111 property taxes, but we also see it in 1190, 1880, 2400. Our general thoughts is that a TIF should go to 111 because they're basically taxes, and they typically have rollback and homestead paid to you by the county auditor. Pilot payments to 2400. Other income, usually because that's paid by other sources to you, like the municipalities, townships, and maybe other private companies. So they're a little bit different in that regard. Board of Revision settlements. We've seen this posted as in 1111, 1190, 1880, 1890. But if you really think about what a Board of Revisions, off-book settlement is, it's taxes. So if we have clients that are posting BOR settlements and taxes, we create a separate line for that so we can track those separately. We don't want that intermingled with your August or February settlements or PUP settlement or anything like that. We just want to be able to track things separately like that. But it basically, obviously, is taxes that you've got a settlement for. As a general rule, what we do is forecast items where you generally have posted it unless it's blatantly incorrect, and we'll let you know that so it will not become an audit issue for you. Okay, so and again, we want to be consistent in coding because a lot of us look back on our trends to try to project the future. That's some of our best information that we've got to help us go forward. And consistent coding doesn't, pollute those numbers to, make that trend data that you're looking at and using, invaluable or less valuable than what it could be. With that, I think I made it to, about 11 minutes over. But I want to make sure that you all have this CPIM code. It's listed right here. It's ARCM CFCT. That's what you'll need to get the 1 hour CPIM credit for this. And if you miss getting that, just let me know. I'll be happy to email it to you again so you can have that code to get that credit. So that's it for the meat of this presentation, although you are invited to stay with us for the roundtable if you have time, which will begin right now. Rules for the roundtable, please state your question as succinctly as you can. Try not to dominate the question time block. And if the answer is too long, we frankly may have to just follow up with you if the response is going to be lengthy. And Aaron, I know that there were some questions in the chat about 510 and okay, you got it. You're a good man. So, all right, roundtable questions. Anybody have any questions about what we presented or have any questions in general? If you have them, make sure you unmute yourself so you can say that.
I do not, and I always appreciate the updates, Chris.
Thank you, Barb.
Chris, Jim Lloyd from Olmsted Falls. I have a question, if I could, for Aaron. Aaron, my question was in the forum, and one of the questions was related to the broadband grant, and I know that it's a Fed grant, but it seems to make the most sense to extend the usage beyond December because those of us, obviously in school districts, we have to support connectivity, need to do that beyond December and into January through the year. Is there any, if you heard anything from the feds about extending that, and what might Ohio or the ODE be able to do in order to get that extended to June?
Yeah, so
Thanks.
I would tell you that I agree with you that it makes sense to extend it. So the House and the Senate in Congress each have their own plans, the HELP Act and the HEROES Act. Both of those pieces of legislation include extensions to that December 30th deadline. So it would seem like that's one of the few things that Congress has agreed on, right? That it should be extended. But I don't think that there is going to be action before the election. And so, the only advice we can give you is what we know right now, which is you should plan accordingly. So I know some schools are thinking that they would move the cost of the internet service to ESSER for the second half of the year, right? And that you might be able to juggle then things that you had, previously paid with ESSER over to the CRF funds. So I'm optimistic that it will get extended, but we can't assume that. The governor's federal liaison, as well as I think the governor, in conversations with our congressional delegation are encouraging and asking for an extension of those funds. Not that you run into your, congressman on a regular basis, but you all reaching out and expressing that same sentiment to extend those funds would certainly be helpful as well.
Aaron, there was a question here. Any discussion on how the free lunch for all students being continued might affect our title funding? The treasurer worries that parents won't be completing forms, so we may lose funding. So,
Yeah, that is an issue that has just emerged. And so I think that I think that we are still looking at that to try and understand what the long-term impacts of that might be. So I don't really have a good answer to that, but we'll follow up with Chris and get that passed along. It's been raised by a few people. You are experiencing the issue that CEP districts would face if they had to still use income verification forms, which is why, I think that the state has struggled to come up with a better measure of disadvantagement so as to not, disadvantage those districts that are using CEP and wouldn't be able to get, a true count using those income verification forms.
thank you.
Aaron, I've got a question.
Sure, go ahead.
Okay, yeah, it's in regard to the broadband, the 510. Is there a set amount that the district is receiving on that, or do you just submit eligible payments?
So the CRF grant, or sorry, the Broadband Ohio Connectivity Grant was, through a application process. So there was a couple, like a 3 or 4 week period, maybe even less than that, at the, middle of August, that schools could apply for up to $250,000. And then we loaded those funds in the CCIP at the end of August. So if you don't see an allocation for the Broadband Ohio Connectivity Grant in CCIP right now, you did not receive those funds.
Okay.
And at this point, because they're going to expire in December, we're not really looking at reopening the application or a reallocation at this point. I mean, if those get extended, then there perhaps is going to be additional funding or at least another opportunity at that. But if you don't have it right now, you could have missed that opportunity.
Okay.
Aaron, there was a question asked here. It was an audit issue. With the CARES funding and the free lunch program, if the district anticipates their revenue is going to go over $750,000 threshold for a federal audit, have they discussed if they may waive that this year? And what that is that if you're over 750, you have to have an audit every year versus every other year.
I have not heard that. We have regular calls with the Auditor of State's office, so I will raise that on our next call. That's not anything I've heard, though.
Good. Thank you. Aaron, can you give your thoughts on House Bill 305, Cupp-Patterson, or any other formula modification for the next biennium?
Yeah, I will say that House Bill 305, in my opinion, is going to meet, unfortunately, the same challenges that Governor Strickland's evidence-based model faced, which is, in theory, it's great. And the calculation works and everybody can follow it. But at the end of the day, how much additional revenue does the state have to fund it? And so do we end up in a place that, there's still, I think, a hope that the legislature could act on this before, in their lame duck session. So before the end of the calendar year. But even if they did that, it's not clear to me where, a lot of additional revenue would come from to pay for it. So then you end up in a situation like we did in 2010 and 11, where we implemented a new system, but then everybody was, capped at getting, 0.75% increase or on a guarantee of 99% of what they got last year. So it really then doesn't actually mean anything. I think that there, could be some benefit from getting it into permanent law. Understanding there really is not any additional money, but in the short term, I'm not sure how that provides or adjusts funding to school districts. There could be a long-term benefit though. In the short term, it selfishly sounds like a lot of work for me without actually a lot of benefit for you.
Yeah, exactly. Yeah, I personally think if I was the governor, I would pay strict attention that there's never been a funding formula that goes out that doesn't have some people feeling that they've been treated unfairly. I mean, has there ever been a funding formula, at least, or and I'll just say in my 43 years, there's never been one that's been completely fair to everybody in their mind. So I think legislators have probably figured that out now after, 3 or 4 DeRolf cases on that. So I'd be surprised if the governor even wants to stick his toe in that.
Yeah, I think that the governor's focus for the next biennium is going to be fiscal stability for the state, but also for, schools and local governments. I think those maps that I showed, although kind of serve as some headwinds as to the reason why you would want to go back to some semblance of a formula, because the longer we wait, the more disruptive it will be. Because if there isn't a change, a meaningful change in 22 and 23, by the time we get to 2024, it will have been 6 years, and things are going to look dramatically different in a lot of districts. And then we will have people upset or confused as to why they are getting more or less funding, which then creates political challenges for both the legislature and the administration. So while I am I perhaps am not as optimistic as some are on House Bill 305, I also think that it is important that we move back to a formula sooner than later.
Yeah, that's a good answer. All right, we've got about 7 more minutes. Here's the main man at the ODE right here in front of you. So
I am going to say, I'm going to add something to what Chris said when he was talking about casino revenues. We have also seen that the Lottery Profits Education Fund transfers have also largely been unaffected by the pandemic, which is good news because $1.2 billion of your overall foundation payments are from the Lottery Profits Education Fund. And then, OBM made a comment yesterday when they released their preliminary numbers that the cigarette tax is also outperforming estimates, as well as the liquor and gallonage taxes. I have not contributed to the cigarette tax, but I know that I have contributed to the alcohol tax increase.
I was going to say, I hope they don't track that, or they'll probably have me close to the top. All right, 6 more minutes. Any other questions?
Aaron, could you opine on a lease purchase with using CRF funds?
I will send you the guidance from the U.S. Department of Treasury that speaks to that, because there's some language that says, if it is your normal course of practice to, pay for something in advance, then you can do that. But I think that it is, so I'll send it to you. I don't want to speak right off the top of my head about if that is allowable or not. And my sense is that the Auditor of State's office is going to be looking at this pretty closely based on everything that we have heard from them about, that services, that you're not prepaying for services. I realize a lease purchase is a little different. It would be better if you could pay for the, for whatever you are purchasing in full upfront versus a lease purchase. I also will just add, because there were a few discussions about this, and I went back and looked at the Treasury guidance. There is a statement about stockpiling, which you're not able to use your CRF funds to stockpile for future pandemics or future emergencies, but the language does say that you can make purchases to basically stock up or have a reserve of supplies for the current health emergency, which I would say that continues past December 30th. And so there's some flexibility there in how you would use how you use your CRF funds for, supply and goods purchases before December 30th that you might end up using after that.
Kyle, you're always causing trouble.
I learned from the best.
Yeah.
I think she's on the call. Becky, are you here somewhere?
So, yeah, hard to say. Any other questions?
Hey, Aaron, this is Rob Showalter at Midview Schools. I just wanted to reach out publicly and thank you for reopening the bus grant or working to do that. We had missed the deadline by a couple days, and I had reached out to you, and you personally reached out to me in the same hour, I believe, letting me know that some people were working on it, and you guys ended up reopening that. So, that's really working to help Ohio schools, and I appreciate that.
Thanks for saying that, Rob. Yeah, when we try and own an issue if we do something dumb and bureaucratic to try and fix it. So we were glad to be able to get that fixed for everyone.
Okay.
I'd just like to say, I'm not Bob Barrett. I don't know if anybody of you noticed that I'm sitting up here with a Bob Barrett name under my picture, my face, and I'm not. I'm Nancy Francis.
Nancy. Well, I don't think we have any other questions here. I think we're going to run right out of time. I think everybody knows, if they didn't know, that and I think Dan Romano on here and I've been here for a long time, 43 years or so. Dan, you don't even look that old. So, but I just want to say, of all the time I've been school treasurer and worked with people at the state, we've never had anybody as strong an advocate for us as Aaron Roush is. And, it doesn't surprise me that he was able to get things changed with the bus purchasing. I mean, he's doing everything he can to help us. And I think we all know that. And just want you to know how much we appreciate it, Aaron. It makes a big difference to us to have a person like you at the ODE.
Thanks. I appreciate it. I appreciate everything that you all are doing every day, and I'm appreciative of all of your work.
Great. All right. I have been recording this, ladies and gentlemen, so I will figure out how to get this saved and put up on our website if you want to look back on it in a couple of weeks. And if we were really wrong, I'll probably take it down. But in the meantime,
you can just edit my comments on House Bill 305 right out of that.
We won't let anybody know that. Okay. Well, thank you, everybody. I appreciate it. Have a great rest of your day.